In this video, we're going to talk about financing and how lenders view a pad split property. So, for those of you that don't know, pad split is essentially taking a single family property that you have as a rental, adding a few additional rooms to it, converting the living room to an extra bedroom, same thing with the garage, and then having a co-living property. And once you kind of buy, renovate, and then want to rent it out that way, what are your financing options? And that's essentially what we're going to talk about in this behind the scenes call that we have with some members of PadSplit. If you want to watch the whole video with PadSplit, it's the links below in the show notes as well.
The question, I mean, others watching this later might ask around financing, right? Obviously, bridge financing makes sense. You're going to acquire a property here, renovate it, and then if they want to cash out into longer, cheaper debt, are lenders looking at this as a single family rental perspective? Are they counting the pad split income of all several properties? How do you guys want to answer that for folks watching this later?
Great question.
There is no lending based off the pad split income at this current moment because it does generate more. Whenever you are doing like a DSCR loan and they're doing an appraisal on the property, they're going to do regular comps to figure out what the value is, but then they're also going to factor in rental comps that are long-term based. So if your house is, and I'm talking from experience, this might be a rant, but if your house is 2,000 square feet and the typical house in your neighborhood is 1,500 square feet, and your rental comps come back at 1,800, call it, less than what yours should be, they're going to go by what the typical comps are, no matter what the size of your house is. So you are limited when it comes to lending on the real estate part of it. Like, it's still real estate. They still need to run comps and find comps on that property. Now you could potentially find a DSCR loan that does use Airbnb or short-term rental comps, and they could utilize that, but that's not every lender, and that's not like every product that they're offering. So you do want to, on the front end, especially if you're looking to BRRRR and refinance and go into something else on the back end, a loan, you're going to want to know how they're going to assess your property on the back end.
My anticipation, Michael, is with time, we will have those products created for what we are doing, right? 3 years ago, we didn't even have a lender that understood what we were. Today, we have several lenders that you say the word PadSplit and they're like, I know what you're talking about. And I can lend you, there's kind of like an approach on how we can make this a successful closing, and they will guide you, right? And I think the biggest win right now is cash flow appreciation and hoping that, and again, in a couple years, we will have a product that will allow us to take equity out so we can recycle this money and continue to expand the portfolio. But my best and wisest advice for purchasing a PadSplit would be go BRRRR, right? Buy, rehab, refinance, add the walls after. Okay? Do not add the walls before you've done the refinancing. So just regular fix and flip loan, get into your DSCR long-term, and then make sure you're adding the walls. Here's the most important step in this process. You're converting living room and dining room. Add some lighting there because a hallway is coming. You're creating 2 bedrooms out of that living room space, but you have a fan dead in the middle. Move them right now because you're doing renovations. Kind of minimize the renovation cost since you're already doing a flip in a way. You're flipping it to yourself, kind of. But kind of think long-term in what the future is going to look like. So you don't have to redo a lot of those things unnecessarily and kind of double create that cost for yourself. And another thing, we've seen an increase desire for investors that are looking for a cash flowing PadSplit. So I get this question asked a lot, right? Close to financing. What's my exit strategy? Well, 1, don't sell. You have a cash cow. Why are you selling? B, sell it as a performing PadSplit. To who? To investors that are looking for a fully performing PadSplit because they have the equity, they have the cash, and they're ready to move and they want a cash flow today. Not in 3 months, not in 4 months. They want to get that now. PadSplit has a marketplace that allows existing hosts to list their property So somebody can go on the marketplace and buy a fully converted, actively cash flowing PadSplit, and you will figure it out how you make that purchase between the owner. So that would be exit B for now.
That's smart.
That's a great opportunity. And to let you guys know, Ray and Oriana, there's another, it's kind of, well, it's blockchain based. It's called Lofty.ai. You guys may be familiar with it. So if you had trouble getting a regular old mortgage on there, what you can do is list this property on Lofty AI. They turn it into a Wyoming DAO, and which is the decentralized autonomous organization. So it's a Wyoming LLC. And what you can do is you have to keep 10% ownership yourself, but you could literally give up 90% of the appraised value to other investors to come in there and basically fund your deal. Now they also get those rents as well, the percentage that they put in there as far as the rental goes. But it is another alternative out there until we get longer term financing in place. And what you could do is you can actually do and set up buyback options. So say you're selling $50 per share per token on that. You can offer, within a 3 to 5 year period, offer a buyback of $55 or $60 if you wanted to buy back those tokens, knowing that later on the value should be higher on that too. So that is another alternative besides just your regular old DSCR loans. Although you did refer me to somebody, so I'm going to be reaching out to them now that I'm just about ready here, see what they can do. If not, I have other alternative plans.
Very cool. That we were not aware of that, so thanks for sharing.
Yeah, I could connect you with them if need be, but I think it would be a tremendous resource for PadSplit and for people, for investors out there. And let's put it this way, those properties would be valued higher by the people buying them because they generate much better cash flow. Right now, their best cash flow ones are their Airbnbs. Well, these generate much more than the Airbnbs. So a greater opportunity. So if you need that connection, I can help make that connection for you with Max, who runs Lofty there.
Yeah, please connect us for sure.
Will do. So am I missing anything else?